Axis Fund House had been one of the favorite fund house for quite a few mutual fund investors, as most of the schemes of Axis were on top of the chart. But things have changed in last couple of years. So in today's video, we'll do a detailed analysis of one more popular fund from Axis Fund House, that is Axis Flexi Cap fund, and try to understand why this fund is not so popular now, and also compare its performance and risk parameters with one of the most popular Flexi Cap fund of recent times, that is Parag Parikh Flexicap fund, and decide whether to continue our investment in Axis Flexicap fund or not. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details like the AUM, that is total asset under management, which is more than 11,000 crores, which in no way is a small AUM for a fund which is only 5.5 years old. That is, the fund was launched in November 2017 and indicates that quite a many investors have invested their money in the scheme. The expense ratio is 0.66%, which is little on the lower side as compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500 TRI. Now let's look firstly at the fund manager. Mr. Shreyas Tevalkarji has been managing the fund since November 2017, that is, from the inception of the scheme. Here, there is no change in the fund manager recently. Now let's look at the trailing returns and compare it to Parag Parikh Flexicap fund. On comparing the trailing returns for the period 5 years and less, it is clearly visible that the fund has not been able to beat its index and the category for almost all the period, which is really bad for a fund. The data of 5 years and more is not available as the fund was launched in November 2017 only. Now let's compare the trailing returns for Parag Parikh Flexicap fund. Here if you observe, for the entire period, the fund is able to beat its benchmark and category for most of the times, and that too with a good margin, which clearly shows how Parag Parikh Flexicap fund is consistent in its performance. Now let's also check the fund's performance for this calendar year of 2023. Here also, from the graph, it is quite evident that the fund's performance is almost same as that of the index, but is not able to beat its category. Hence, we cannot say that the fund's performance is improving, which again is not a good sign for a fund. The trailing returns data shows that from last 5 years, that is from the inception, the fund is underperformer. Is it true? Then how come the fund is having an AUM of more than 11,000 crores? So let's check the calendar returns. Here we have calendar returns data for 6 years, which we'll compare with its index and category average. As evident in the graph, the fund is able to beat its index and category till 2020, but not with that a huge margin. But after that, the underperformance has started, and in the last 2 years and first 6 months of 2023, it has performed quite poorly as compared to its index and the category. This extended underperformance of more than 2.5 years has affected the overall returns of the fund. When we compare the performance of Parag Parikh Flexicap fund for the same period, the fund has underperformed in 2018, 19 and 2022, but has usually outperformed its category and average in the year 2020, 2021 and the first half of 2023, which has improved its overall returns. Hence, from the calendar returns graph, we can say that the fund has not underperformed since launch, but since last 2.5 years, it is underperforming. So before checking the risk parameters and decide what investors should do, just quickly check the portfolio allocation. As evident, large cap stocks form around 81% of the portfolio, whereas mid cap stocks form around 15% of the portfolio, and the rest 4% is allocated to small cap stocks. I really fail to understand that why the fund manager do not pick more stocks from mid and small cap category when they have the liberty to pick stocks from any category. Not only with this fund, but if you have observed, most of the flexi cap funds have large cap heavy portfolio. Why do fund managers do not utilize the liberty they have and pick some good stocks from all the categories? Quite strange, isn't it? The portfolio seems little concentrated with around 60 stocks only, and top 10 stocks form around 48%, that is almost half of the portfolio, and top 3 sectors form more than half, that is 52% of the portfolio. The fund has been underperforming since last 2.5 years, but still the turnover ratio of the fund is just 27%. The returns data and portfolio allocation do not provide much positive data for the fund. So let's check the risk parameters before concluding what investors should do. Here, we'll compare the parameters with the benchmark index and the category average. First one, the mean returns, that is, the average returns in a year, which is 20.02, which is less than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the returns are deviated away from the mean returns, which in this case is 15.53 and is higher than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio. That is a tool to measure the risk-adjusted return, which is 1.03, which is less than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta. That is the volatility of the scheme compared to the benchmark, which is 0.96, which is more than the category average. Here, lower the value is better. Fifth one, alpha. That is the tool that measures how much better the fund has performed compared to its category. Here, it is minus 5.08, which is very low as compared to the category average. Here, higher the value is better and should be a positive number. Here, I would say that these are one of the most disappointing risk parameter values I have seen for a fund. On none of the parameters, the fund is better than its benchmark index or the category. Just for comparison, let's see the risk parameters for Parag Parikh Flexicap fund. I don't feel it needs any explanation. The figure says by itself why Parag Parikh is one of the best Flexicap funds in its category. I don't feel there is a need to check the capture ratios. So let's directly see what investors should do. But before suggesting what investors should do, I request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel if you are not done till now to watch such interesting videos in future also. So coming back to the conclusion, what investors should do. First, for the existing investors. The fund has been underperforming since last 2.5 years, and this underperformance period is quite long. Generally, all good funds can have a short period of underperformance, but 2.5 years period is quite long, and it has been observed that for funds to recover after such a long underperformance is quite difficult. Hence, I feel that one should exit this fund now. But still, if you have confidence in the fund manager and the fund house, you can give a try for 3 to 6 months more. Secondly, the new investors. I feel that instead of going with this relatively young fund with no great performance and very poor risk parameters, one can go with better performing funds with good track records like Quant, Parag Parikh or PGIM Flexicap fund. I would like to add that I do not have Access Flexicap fund in my portfolio and is not planning to add to my portfolio in near future. But I do have Parag Parikh Flexicap fund in my portfolio. Do comment in the comment box for which fund should I do a detailed review or comparison in my next video. I am also planning to start a series for review of individual stocks. Which one should I do? Please subscribe to my channel if you are not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.